2024 is now upon us, and the markets have had an average increase of 5% in the last month. Both the Nasdaq and the S&P 500 are at their historic highs. The major world stock exchanges are preparing to close the year with a positive balance sheet and average earnings above 20%. The latest statements from the Fed and the ECB seem to remove the nightmare of further interest rate increases, and this has given wings to the stock market. Many doubts still remain about the solidity of this growth as inflation remains high and the economy is starting to show some signs of slowing down. In this scenario, we will try to indicate some companies with a bright future, proof of any market collapse and crisis, stocks that are most likely destined to beat the market in 2024. We are talking about the best stocks to buy for the 2024. If you don't yet have these shares in your portfolio, start keeping an eye on them and don't miss them at the first available opportunity. We are talking about companies with a certain future, and which will probably see their prices grow dramatically in the coming years. They are all financially solid and well-known companies that operate in various sectors of which they are often the leaders and have always demonstrated that they know how to plan their future in a truly incredible way. The companies we will tell you about have very different situations from each other. In fact, there are companies that have had excellent increases in 2023, others that have not yet had a decisive impulse, and still others that have been snubbed or even ignored by the market. But before we start describing the best stocks to buy for the 2024, remember to subscribe to the channel and activate the bell so you don't miss the new videos. Thank you. Now let's finally start with the best stocks to buy for the 2024. Number 1, Amazon.com Inc., AMZN. Amazon is a stock that seems decidedly superfluous to describe. To the detriment of many analysts who feared for its reduced margins, the company has grown incredibly in all its sectors, showing truly incredible strength. Today, the stock has reached the impressive capitalization of $159 trillion, which makes it one of the largest companies in the world. The stock has grown by over 80% in the last year. Certainly being one of the leading companies in the advent of artificial intelligence has given an exceptional boost to its growth on the stock market. Amazon is not just e-commerce. This year, its AWS segment recorded growth of 12%, service subscriptions 14%, advertising 26%, and third-party sales services 20%. In short, the company grows in all its sectors in a constant and continuous manner, reaching an all-time high in revenues. The scores that Amazon obtains from our tool are 3.69 for the Insight score, and even 4.28 for the Analyst Recommendations score. But in our opinion, the stock still has a lot of fuel before it starts to slow down and could be launched to return to its historical highs, surpassing them with momentum, i.e. a target price of over $240, which would mean further growth of 57% compared to today. Number 2, Brookfield Corporation, BN. Brookfield is a stock that we have recommended several times in recent months because it is one of those less famous companies, but with enormous potential for the next 5 years. Brookfield is a true multinational with various interests and its own appendages. Among others, its other fundamental parts such as BIP, BEPC, BAM, etc. are listed. The company has multiple interests ranging from infrastructure, renewable energy, insurance to real estate and asset management, all guided by a management that has always proven to be up to the task and above all has been capable of achieving the objectives that it has placed. Today, Brookfield has achieved an increase of 18% in the last month alone, reaching a growth of 27% since the beginning of the year. This stock is still undervalued, and if you notice, it is the only one that, despite a low Insight score of 234, we are sure could be a revelation for 2024. The company has a typical strategy of buying businesses that are not performing well at low cost and then returning them to optimal profitability. This is why in 2023, Brookfield spent a lot of money on acquisitions, and all these investments will begin to bear fruit as early as next year. Its target price based on the value of its assets is 76 or 90% greater than its current market value. Number 3, Canadian Pacific Kansas City LTD-CP. Canadian Pacific is one of the largest railway companies in North America, and this gives it excellent growth potential. It is the only company that connects Canada, the United States and Mexico, which means having an incredible strategic advantage in freight transport, its core business. Many US and Canadian companies have moved their production from China to Mexico, which means that the most optimal transport route for goods is and will always remain rail transport, where Canadian Pacific is the undisputed leader. The company has a consolidated and strategic business that will remain so for the next decades. In fact, to date, there is no possibility of new competitors entering the market given that railways are unlikely to grow, nor are there cheaper and safer alternatives than rail ones for goods. The stock has grown by 13% in the last month alone, but if we consider the beginning of the year, we see that the growth is only 6%. So in our opinion, the price is still undervalued. Its insight score is 3.83, while that of analyst recommendations is 3.92. In our opinion, the potential target price could reach $100 with a growth of 26% from the current price. Before continuing with the fourth company, we want to ask you a question. What do you think about stock investing? Do you have a precise and proven strategy for investing your money? Let us know what you think. It's very important to us. Thank you. Number 4, Fortinet Inc., FTNT. Fortinet is one of the leading companies in cybersecurity, a crucial sector for the future, which sees a constantly growing demand from companies all over the world to protect their businesses from increasingly dangerous and frequent hacker attacks. Fortinet, which was already launching its growth in the first months of 2023, saw a bad collapse in prices due to the quarterly reports in which the company's top management confirmed a certain slowdown in revenues, which, however, has already happened in the past but has never stopped the constant growth of the company. The company is certainly solid and has a bright future because it is a leader in a sector that promises to grow exponentially in the coming years. Today, in the last month, the stock has already recovered 11%, and this means that since the beginning of the year, despite the collapse of 2023, it has gained 22%. Fortinet today has an insight score of 415 and an analyst recommendations of 370. In our opinion, the stock is still very undervalued, and its potential target price is decidedly higher than $80, i.e. almost 40% more than today's prices. Number 5. Livent Corp. LTHM. Livent is one of the leading companies in the production of lithium and its derivatives, a key sector for the future. Today, this material is necessary for many rapidly expanding companies and sectors. Just think of electric car batteries, accumulators for photovoltaic systems. But not only lithium-derived products are also necessary for the pharmaceutical and aerospace industries. In short, lithium is a key product for the future of many sectors, and today its use is safe with constantly increasing demand. Livent has had a steady decline since mid-July 2023 based on fears of a slowdown in the electric car market due to high inflation. The possible rate cut and an easing of the anti-inflationary policy could give new impetus to the electric car sector, and new incentives for energy conversion, which are very likely to speed up the process, could cause the stock to grow exponentially compared to today's decidedly underestimated prices. In the last month, i.e. since the anti-inflation policy seems to have started to bear fruit, the stock has recovered over 30%, and today it is down only 9% compared to a year ago. Livent today has an insight score of 403 and an analyst recommendations of 3.96. According to our calculations, the stock has all it takes to reach a potential target price of $40, i.e. 130% higher than current prices. At this point, if you liked the video, we ask you to subscribe to the channel, put a like, and activate the bell to stay updated on new videos like this. Thank you for your support. Number 6. Alphabet Inc., Google. Alphabet is an undisputed giant of the world economy. It is part of the magnificent 7 companies related to technology, has a capitalization of $1.78 trillion, and is one of the leading and protagonist companies linked to the development of artificial intelligence. Despite this, it is probably the big company that has grown the least since the beginning of the year, and still has much more room for growth than the others. In fact, the development of artificial intelligence, which has given enormous impetus to many of its competitors. First of all, Microsoft with OpenAI could represent a sort of revenge for Alphabet, as there is the feeling that it can recover the ground lost to date. Furthermore, with Google and YouTube, the company is the undisputed global leader in search engines and online advertising, which is constantly growing. In short, a company decidedly connected to the future. A real money machine that generates impressive and continuous cash flows and which promises to improve even further. In the last month, Alphabet's growth stabilized at 3%, but since the beginning of the year, the stock has grown by 60%. Alphabet today has an insight score of 3.91 and an analyst recommendations of 411. According to our calculations, the stock could reach the potential target price of 190s, i.e. a further 40% higher than today's price. These were the best stocks to buy for the 2024. And we are certain that from a medium and long-term investment perspective, these securities are a certainty of profit. In the immediate future, there may be various strategies that can be applied immediately to plan an adequate and safe investment. Obviously, every investor has his own personal needs and objectives, so it is difficult to describe a strategy that can be valid for everyone. Certainly, as fully described in this video, there are some of these companies which already today have a very undervalued price and which can be purchased immediately, and others which have grown a lot for which one can wait for. Which one can wait for a market correction or bet immediately from a long-term perspective? Finally, we remind you that we are not financial advisors and that these are not invitations to purchase, but are simply our personal analyses, the result of our experience on the US stock market. We always invite you to delve deeper and verify our analyses before investing your money, because you must be aware of your investments and not risk losing them just because of rumors you hear online. See you soon, investor!